We wanted to acknowledge that 3 years into the recovery, the global economy is still not hitting its stride. Demand for commodities has eased, and a pullback in natural resource prices is cutting into growth opportunities for commodity-producing countries like Canada.
Although we do think that we're going to be faced with subdued GDP growth over the next couple of years, the one bright spot is the improvement in the U.S. economy and the potential for Canadian exports to contribute to Canadian GDP growth.
Smaller companies that are challenged financially, liquidity constrained, without the continued access to external financing, may find that their projects are either delayed or canceled. But that said, the larger and the mid-sized companies are continuing to develop the resource.
Let's talk about what President Obama said the other day about Keystone XL. We need to determine whether there's going to be a net increase in carbon emissions as a result of Keystone XL. I took that as being positive for Keystone XL. I think that the Keystone XL pipeline will be approved, and I think a lot of it really has to do not so much with oil and gas, but with diplomacy. For the U.S. to decline approval of the Keystone XL pipeline when this project has been identified by the Canadian government as being very key, I think would be a major diplomatic slap in the face by the United States against Canada.
International Financial Reporting Standards does not have standards currently to deal specifically with rate-regulated accounting. And as a result, in Canada today, there is chaos and anarchy in accounting for rate-regulated activities. There's at least 5 different fundamental accounting frameworks that are being used. So we're very much concerned that ultimately there will not be regulatory accounting for Canadian rate-regulated enterprises under IFRS.
As we're trying to come out of the worst financial crisis in history, investment firms are really rethinking the way they're doing business. And specifically, they're trying to be a lot more real-time information-driven companies that focus on optimizing their use of capital. And by that, I really mean the amount of return that they make and also properly measuring the amount of capital that they're taking to actually generate those returns.
Just to recap what we've done on the Canadian banks, we signaled a negative outlook about a year ago, mid-year 2012, due to industry-wide concerns. In December, we adjusted our industry assessment, which is a key input to our rating framework.
And we do not believe a reduction in demand for consumer credit will have a significant impact on issuance volumes.
When the recession hit, a lot of the provinces were virtually in a panic mode. Everybody, the general media, the provinces, a lot of the economists were basically thinking we might be heading for another depression. The immediate reaction of the provinces was to employ fiscal stimulus measures to mitigate the impacts of that on the economy.
So the PBR formulas do allow for capital spending related tariff adjustments, which should help alleviate the pressure, but we have yet to see how the regulators are going to implement those adjustments, and as they say, the devil will be in the details.
So here's what's happening at the mining and metals. It's really a simple story. Operating costs are increasing, commodity prices are decreasing, and so the miners are getting squeezed. Because of that, margins on the contemporary spot prices versus their cash costs, that margin's getting reduced, and the companies that are on the higher end of the cash curve or the cost curve are starting to feel the pinch.